So good afternoon, everyone. Thank you all for coming. I hope you're having a great day so far. For those who are continuing from the annual LP meeting from Raed, welcome. And we also welcome the new arrivees from attending this part of the day. I think today marks as a very important session happening during very interesting times. 2 weeks ago, the Tadawul held its capital market forum. This week, the CITC is organizing the LEAP event, which is one of the very important events happening in the world, and demonstrating the ability or showcasing the ability of the Saudi ecosystem in attracting the investments in the tech startup and the overall VC ecosystem. For the topic today, it's around unlocking liquidity and exploring KSA as a potential for Regional Tech IPO Hub. And for that, we're joined here by a very experienced panelist. To my right is Zaid Ghoul. Zaid is a managing director and head of investment banking at SMB Capital. And Mr. Naser Alajaji. Naser Alajaji is the chief listings officer at Tadawul. And to his right is Mohammed Alaqeel, who's a director of private equity at Jadwa investment. I've decided to look at the discussion in three key themes. One is really about the Saudi capital market, the status of it, the attractiveness, what's happening more recently. The second is around the investment landscape in terms of valuations, in terms of ability to do the deal. And the third is around exit and IPO preparation. So with that, I want to start with the first question around how is the Saudi market positioning itself in the region in terms of attracting IPOs generally, and with a more focused approach in terms of attracting tech IPOs. With that, if you want Naser to open up, and probably you may want to talk about what is it that is being done from a governmental level, given your previous experience at the Financial Sector Development Program.
Amr. This is working? Shukran, Amr. I'd like to maybe thank Raed for this amazing, I think it's the second iteration of Majlis, and hopefully to see many more. Well, if you really take a step back from a macro level and what the government has been doing and what the infrastructure providers have been doing as well in the past couple of years, you've seen a strong and clear messaging from the government towards tech in general, emerging technology more specifically. You've seen a lot of activities when it comes to the soft angle of it, which is around, as you rightly mentioned. We have LEAP tomorrow. I think last month we had the Saudi Capital Market Forum. A couple of months before that, you had the Future Investment Forum, and then a couple of months before that, you had the Financial Sector Conference, and so on. So all of these conferences are somewhat of a place where entrepreneurs, government agencies, regulators, infrastructure providers, and also investors convene in a unified place, in a single place. And that basically drives some of that pipeline, some of that positioning pipeline in the Kingdom of Saudi Arabia. If I'm going to talk about the capital market more generally, we've seen a lot of activities recently when it comes to tech IPOs more generally, and maybe the IT services sector more generally, or more specifically, sorry. That paved a very good way in our assumption that most of the emerging tech companies today can see as successful examples of that cornerstone of the capital market more generally. You talk about liquidity, you talk about diverse investor base, you talk about listing requirements, and so on. So when you bring all of these three components together, that basically positions Saudi as a potential emerging tech IPO hub at Tadawul, with the VC ecosystem and the private equity ecosystem playing a critical role when it comes to funding these opportunities more generally. And we see a lot of them here, obviously, on my right and my left, that I think they're going to give more insights when it comes to some of the angles as well.
Great. So, Mohammed, probably you may want to talk about the investment landscape and how do you consider those investment opportunities when thinking about the potential exit on the Tadawul Stock Exchange?
So basically, when we look at different companies and our portfolio companies, we look at it in a sense that financial investor is not here just to provide with financial capital. And what we're looking for is we want to create value and deliver value to our portfolio companies, being in a sense that it's corporate governance or strategy or IPO readiness. I think it's all linked together when it comes to our investment landscape. When we look at corporate governance, as companies grow and develop, the required control and financial reporting that is needed is much more critical, different to the point when they when they founded the startup or developed it. So what we play a role here is basically we ensure that the right procedures are in place for our portfolio companies. Even from a strategy point of view, there is always that missing link between startups or tech companies and the public market perception or expectations. So someone needs to sit in the middle, making sure that all these expectations are aligned with the public market expectation. And most importantly is the IPO readiness when it comes to the preparation and the investment landscape.
I think I'll come to that. What's your perspective, Zaid?
Well, there you go. Thank you very much. Shukran. Actually, when you look at Tadawul as a platform or a vehicle for companies to raise capital or to be visible, it's the largest and most liquid market actually in the region. And if we look at the experience in the past 2-3 years, it has attracted issuers from inside and outside the country. And I think if you couple that with the readiness of the regulators and the Tadawul team on accommodating changes that are necessary to attract investors and capital, this adds the icing on the cake. And I remember clearly when Americana wanted to do the first concurrent and dual listing, because if you look at the regulation as we speak, even today, you have a regulation for cross-listing, but not to ring the bell in 2 markets at the same time. So we worked heavily with the Tadawul team and CMA team, and the level of attention that was given to that transaction to open up the market for this particular path was really amazing. So it is the right vehicle, and I think we will address as we go on, Amr, the importance of that vehicle to the to the tech companies and fintech companies in specific.
Okay, so we spoke about some of the market developments, and the most important development that took place was the introduction of Numu as another venue for listing companies, especially startups and companies that may not be ready for a listing on the main exchange. How has the introduction of Numu been in terms of its impact on valuation, impact on discussion with potential private equity and venture capital players as a way from negotiation perspective and a way of reasoning why such an investment from private market over a direct listing on a new exchange? And probably, you know, the question is more to Zaid as well as Mohammed.
Yeah. If you allow me to start, I'll let Mohammed comment on the private equity and the valuation. Numu, I think as an initiative, is a great initiative that will allow small and medium enterprises to practice being a public company before they face reality on the main market. The regulations as well, if you look at it, the requirements on these companies are less strict to go, which again, it encourages the small and medium enterprises to come. I think we did have a lot of discussion with Munshaat actually, if they can somehow, as part of their mission, sponsor the education and understanding of small businesses into the importance of going through the full experience of being listed on the Mo market. And I think if you see the number of transactions that takes place, if we look at the statistics of last year, Amr, I think 43 transactions, out of which 38 were on the Mo and only 6 on the main market. I think the only thing that, and we as a leading investment bank are in continuous discussion with the regulators, is how can we enhance the liquidity? Because this is honestly, and probably Mohammed can comment on that better than me, is what worries investors from using NMO as a vehicle to exit. But I think using it as a vehicle to expose the company and maybe raise funds, and the direct listing component of it is very interesting.
Thank you, Zaid. I think that's a key point, which is basically liquidity. What we noticed that liquidity with Nemo is not that significant, and even from exit perspective, founders or companies are limited by selling only 20% of their stake, and they will have a certain lockup or requirements to graduate to the main market, which is more liquid and more prestigious in that sense. In terms of valuation, I think it's different because tech companies or startups, when they start thinking about valuations, the value is driven by mainly revenue growth and revenue multiples. However, when you get to the public market pricing exercise, it's a bit more difficult because institutional investors and retail investors, they're more focused on earnings and earnings growth in the future. So I think founders and tech companies, they need to adjust their expectations when it comes to valuation, whether on Numu or in the main market compared to the previous rounds that they usually encounter.
Yeah, which by the way brings in a very important point, Amr, today. And I want to comment on it because we've seen the market, on the main market, emerging in sophistication by using different valuation methodologies than the PE. Normally, if you look at the market 5 years ago, it was a PE-driven market. You ask anybody, they say, what's the PE? And the investors used not to price growth, but I think the market has evolved significantly. We've introduced a lot of IPOs where the matrix of valuation was completely different than PE. And I think when it comes to tech and fintech companies, I think the education requires a little bit further because these companies tend to come to market with not too much profitability, if at all, and you need to factor in growth pricing into that mechanism. But the evolvence and reception that we've seen so far is very, very encouraging on evaluation.
Sure.
Firami, Amr. Again, I think Zaid and Mohammed gave more of the investment landscape aspect of it, which is quite interesting. But when you look at, we agree on the liquidity component. But if you look at the percent of increase, call it year over year, month over month, historically, basically, throughout the past couple of months and years, actually, we've seen liquidity grow quite tremendously. It's still comparing to the main market, it's still quite small when you compare it, but eventually it is picking up. And our perception and our expectation that it will continue picking up, especially with the fact that direct listing was introduced, and we're seeing a lot of activity when it comes to direct listing on Numu. We're seeing a lot of applications and activities when it comes to the Numu market more generally. And in a couple of years, we truly believe that the number of companies at Numu or on the Numu platform will be far larger in terms of numbers, not in terms of value, than what we see today in the main market, which will also drive liquidity. We see a lot of also, call it interest, call it inflows when it comes to the international community more generally in strategic positions or strategic companies at Numu as well. Primarily, most of them are IT or tech more generally. So all of these converge together, tell you that the Numu market is it's picking up. A year from now, maybe continuing on the speech that we heard earlier, I can tell you can imagine it either doubling in terms of liquidity or even in terms of number of listed companies as well.
So does that mean that more regulatory changes may take place to increase liquidity on Numu?
Well, I can't really talk on behalf of the regulator more generally, but I can tell you from the pipeline that we see today, from the discussions that we are involved in, it's not really a regulatory component, it's more of a market-driven aspect. We have to do our job at Tadawul to make sure that the pipeline is healthy. We need to make sure that the pipeline doesn't take too long. Companies, especially startups and tech specifically, the runway is extremely important. So every single day or every single week or even every single month actually is extremely important. And we will make sure that we drive that in a high-speed train or as fast as we can.
Very clear. So Mohammed, let me get back to you on the point you talked about on preparation and governance. What kind of help you as a private equity or a venture capital investor, more recently you started doing some tech investments. So I want to shed some light on the preparation taken by those companies, especially for those who are based in the region in terms of preparing them and taking them public on the Saudi Stock Exchange.
So what we noticed that having an external financial investor will help in ensuring that a proper financial planning, proper financial control are in place that will make sure that will take basically the company to the next level, because each phase of a company requires certain level of financial reporting, budgeting exercises, and control in place. As companies grow and develop, and they have several or different verticals, these requirements become more critical and more important. So having a financial investor who's done that before actually will help in instigating such changes with the corporate governance landscape within the company.
What about the head office for these companies and kind of preparation that you make on that front?
Yeah. So basically, what we witnessed is basically a lot of startups or tech companies here in the region are not based out of Saudi Arabia, where basically their primary market, or in some cases their only market, is Saudi Arabia. So when they grow significantly and they start considering an IPO on Tadawul, they get struck with a massive restructuring exercise. And this will have significant capital gain tax implication or duties on their income statement. So having a financial investor will help them basically identifying these issues. And this is what we've done this is what we've actually did in one of our investments that was in the tech space that was based out of the Saudi market. We've actually worked with management closely in helping them assessing the impact of moving the head office to Saudi. And that's very important.
Clear. I think, Zaid, we talked about the Saudi market, talked about how the liquidity is increasing in the main as well as the Numu. How is the pipeline? And I think I want to talk more about what pipeline do you see and what is the focus from pipeline perspective on the Numu market as well as the main market. And I want you to, Mohammed, also to shed some light on opportunities that you see in the private side.
Yeah. When we look at the potential pipeline of tech companies and fintech, and my focus is on fintech because it somehow takes the lion's share. And if we look at the funding that has happened in Saudi last year, it was 1.4 billion. And I think fintech contributed 700 million out of that. The appetite, readiness, and pipeline, Amr, tend to be evolving with the evolvement of the industry. And if I want to copy the comment at the start of this event, personally, the way I see the VC and the tech industry from a VC perspective evolving through 3 stages. Stage 1 is the pre-2019, which was, the way I call it, it's a preparation and a startup phase where ideas are being pitched, VC companies were being established, business model is being assessed, and those who succeeded to raise seed and pre-seed and stage A and probably B have reached to the COVID era, which is the second stage. The 2019 COVID era is what I call the disruption phase, and the growth phase, because this is the time where we couldn't live without technology, and it ended up opening a huge platform. And I think that phase continued until end of 2022, 2023, where we see huge evolvements in VC funding, and these companies are coming up. The third phase is what I'm looking for, honestly. It's 23 onward, which what I call the acceleration and innovation phase, where we start to see these companies. For a company to list, you need investor appetite, and the appetite for sophisticated VC and PE investors tend to come way ahead of the rest of the market because they take the majority of the risk. And I think if we look at the $700-800 million that were raised, and the largest 4 or 5 being Namara and Tabi, they are into late stage, Series C and D. And if you look at from a VC funding perspective, those guys are either gonna go through the trade sale route or the IPO route now. So the pipeline is very visible. I think the appetite in the market is there. We led the latest funding round for Namara, and I can tell you the demand was insane on that one. So the market is really, really interested and thirsty for these kind of companies to come.
You should be focusing on Tabi as opposed to Namara from Raed's perspective. So Mohammed, how do you see the pipeline?
So I agree with Zaid, and what we've noticed in the private equity space that we've seen a lot of, let me call them graduates from the early stage and developed VCs and startups that are coming our way. Certain companies, they say that, okay, we've grew significantly for us to consider partnering up with a private equity firm to help in expediting or reduce the burden on management for preparing on the IPO. And the pipeline is increasingly flourishing for us. I was reading yesterday an interesting statistics that around the VC funding was around $1.4 billion in 2023, exceeding the $1 billion mark for the first time for Saudi Arabia. And we've seen a lot of companies actually coming our way as they are considered now pre-IPO opportunities for us to partner with.
And this is interesting, Amr. If you see 2023 saw 9 exits, none of them went through the IPO route in Saudi. All of them went through the trade sale M&A. I think they probably needed the PE to sophisticate the company prior to go public, or they were taken out by a larger, a larger company in the same field, like Delivery Hero taking over Hunger Station. But I think if I look at the late stage funding that compose the majority of the 1.4 billion, I think those companies might be eligible more for an IPO than a takeout, and we will be very interesting to see them coming.
Great. One final question to you, Naser. What collaboration, wearing the regulator or the exchange hat, what collaboration is needed between government and institutions as well as companies?
So we're not really regulators, so we're infrastructure operators, so I'll put that out first. But we work closely with the regulator. And I think the government more generally, and obviously with the regulators, have worked tremendously ever since, and I think Zaid articulated it in a very good way. Pre-2019, we saw the disruption of the VC ecosystem driven by SVC. We saw the sectorial strategies primarily driven. We were talking about fintech earlier. The fintech strategy was announced in 2021, etc. So in terms of drawing the plan, I think the government did an excellent job in terms of drawing that plan. The regulators started introducing amendments, call it regulatory enablement, such as direct listing or any other ease of requirements that the regulator has put in place in capital markets or non-capital market related activities, let that be fintech or any of the other components as well. You have MCIT played also a critical role when it came to the cloud computing aspect of it. It was a big gap, but I think they put the right policies, the right tools in place as well. So in terms of the back-end infrastructure, I think we're set, and maybe I'll add maybe a fourth component to what Zaid mentioned, which is around, I think now is the time where we see these graduations happening. and there's no right time and place other than the exchange, whether you want to look at it from an umum perspective or even from a main market perspective. And I can tell you, we're seeing a lot of interest as we speak today, and we actually have a couple of files in place from fintechs and emerging technology companies backed by some of the VCs and PEs that we see here in front of us today.
And the regulators are receptive.
Less than a minute, Zaid.
Yeah, the regulator they're very receptive, Amr. You know, all these are ideas that are being exchanged. Probably SPAC would expedite if they allow SPAC to come. Probably if they consider direct listing on Tadawul might be of interest, whereby you don't need to sell immediately, let the market see what your story is, and then pick up a valuation as you go. But we're very blessed to have a regulator that is really proactive, and I think it's a matter of time.
Great, thank you all. We don't have time for Q&A, but the panelists are available for questions later on, so thank you all.
Quran.